Good afternoon, everyone. We're going to give it a few more minutes. We had a little technical difficulties with the invite, so I'm going to have a few more minutes just to allow people to join. Well, good afternoon, everyone. I think we'll get started today. We are going to be recording this as we have with the past 2 town halls, but I would like to thank you for attending our 3rd town hall today on the 13th. Hopefully we have some good content for you today, but as always, we are in a rapidly changing environment, and so there may be some changes that are coming up. Seems like things have settled down just a little bit since the last time we spoke. But I do hope everyone had an enjoyable holiday weekend, took some time for yourselves, for your families, just to kind of decompress. Today's probably got about 14, 15 slides, and along with Diana and myself, Matt Hatfield is also going to be joining us today. He's fresh off a full week of the PPP, the Paycheck Protection Plan, which has been opened up for businesses for up to 500 employees. And I think we are in day 3 for independent contractors. So I know he has had some experience working with employers in the PPP. We also would like to learn of what your experiences are. So we're going to try and open it up for Q&A. There's about 50 people that registered, 55 actually. We're at about 26 that have joined so far. So how about send me an email to info@arcwood.com, info@arcwood.com, if you'd like to share your experience. And then after Diana kind of does a quick introduction and some updates on the Families First, we'll go into Matt's section and kind of do a little bit of a Q&A. But again, if you'd like to share any experiences that you have had and kind of have a conversation with us, you are certainly more than welcome. Please send me an email to info@arcwood.com, and then I'll unmute you to bring you in the conversation. And it's a new process for us, so we'll see how it goes and see if I can continue to have it orderly. And if you just ask a question, certainly continue using info. That seems to be working out pretty well. And then at the conclusion, after Diana and Matt, I'm going to follow up with just a few benefit changes, which hopefully everybody should be aware of. I know collateral has been sent and distributed directly from the insurance companies. I know we've been sending out collateral to our clients, but I just want to just do a high-level review, make sure everyone's aware of some of the benefit changes that are happening. And then in addition, there are a couple of FAQs that I've been having with some of the clients that we've been talking with, and so I'm just going to kind of follow up from some of the business leader conversations that I've been having. I am going to send out a brief survey at the end of this. Probably close the business by tomorrow is when it'll be hitting your inbox. Please also check your spam email. We've been noticing that, I think with just the high utilization of like campaigns and constant contact and things of that nature, we're recognizing that a number of emails are getting caught up in spam filters. So if you can whitelist us at arcwood.com, that might be helpful as well. But hopefully by close of business tomorrow, you should be receiving a survey from us, and it's really just going to be just checking in, give an opportunity to have a little more dialogue, a little more conversation, just kind of see where we may best serve you and your participants during this time. And then finally, just for a quick disclosure, Arcwood Financial, Arcwood Benefits Consulting, and Arcwood HR, we are all independent companies of which we are not offering legal tax or legal or tax advice. Our goal is to provide information to you for assistance in making decisions for your company. We will certainly leave the legal and the tax work up to those professionals, which is why we like to invite Dennis and Matt along with our conversations. And for this, I think I'd like to do is turn it over to Diana. I know Diana said her world has settled down a little bit with the changes through the emergency FMLA as well as the emergency paid leave. So Diana, I don't know if you're unmuted. Are you unmuted?
Here.
Well, good morning.
Good afternoon.
Good afternoon. I can hear you loud and clear.
Okay, good.
So what's going on in your world?
So just like Pete just said, it has kind of, knock on wood, quieted down a little bit. We haven't seen any new updates to the DOL questions and guidance. So we've had a week where we can kind of settle in and kind of deal with any one-off situations that may come up. but just wanted to give everybody a couple of quick reminders about the FFCRA. It is the paid sick leave and the paid family leave. If you have not yet put your poster up and or emailed it or mailed it out to your employees for those that are teleworking, please make sure you have done that, because that is one of the big requirements with the DOL, is making sure that you are notifying all of your employees about their rights with these two leaves. If you have employees that are starting to ask for these leaves, you can and you should get written notice and request from your employees for these leaves. Some of the big points on that notice from them is that it has to have your employee's name on it, the dates that they are requesting the leave, the reason why they want to take the leave, and a statement from the employee that says that he or she is not able to work because of that reason. If it's for the child care reason, you also would like to have the name and ages of the children, the name of the school that is closed, and a statement from the employee that there are no other persons available to care for the child. So just a reminder on that as well. You will want written notification for the tax credit purposes as well. And those are just kind of the two big updates and reminders that I have, Pete.
Great. I know I was looking at the webinar that came through from the U.S. Chamber. And if anybody, for all of our listeners and participants, uschamber.com, they have a really good source of information, really kind of split between themselves as well as Inc. They're doing weekly webinars on Friday afternoons at noon. Some of the information is relevant to us as business owners. Some of the information is more relevant to independent contractors. And then also there's also different topics for just individuals. But there is some nice information. And when I was on, I think it was last Fridays, might have been the Friday before, the question came up a number of times, and I don't know if you've run across this, Diana, but what happens if somebody wants to file or try to file like a workers' compensation claim? Like what best course of action? Has that come across any of the clients that you're working with directly?
I haven't seen that directly, but it is something that I've seen in some of the webinars, and the best advice that I've seen so far is submit the claim and let the insurance company make that decision. You as the employer shouldn't make that decision of whether it is or is not necessarily a workers' comp claim. So put it through the system and let them decide.
Okay, great. So probably just a good baseline decision is just to really let the insurance carriers, let the agencies, let them kind of work through the details and don't impede any participant or any employee's question about something. Is that a fair statement? Definitely. Okay. Well, great. I appreciate that, Diana. And up next, Matt is going to be giving us a little bit of an overview of his experience of last week. We do have a few individuals that said that they would be happy to share some information with us. So Matt, when you're ready for that, then I will unmute them. And are you with us? Have you unmuted yourself? All right, so that's going to be a no. I'll get you, Matt.
How about?
There you go. Oh,
no.
Sorry, I was a little bit too quick on the trigger. I apologize for that.
I had it muted in two places, once on my phone and once on my computer. So can you hear me now, though? Right?
I can hear you loud and clear.
Awesome. So unlike Diana's world, things have changed fairly, well, I'd say significantly, not in terms of official pronouncements, but in terms of how the Paycheck Protection Program is being implemented is probably the biggest changes week over week. I have talked to several clients. I've actually talked to several banks. And it's a whole wide range of what banks are requesting. I will give you my 2 cents as to what I think the intention of the act was, and then you'll see where maybe some of the banks have kind of gone astray from that. So I believe the intention of the act was to have a very streamlined application, as evidenced by the SBA app that's on SBA.gov, and then have the banks basically ensure that that their client can be lent to, meaning that they have all of the appropriate clearances in place for money laundering and all that type of stuff, and verify the amount that they are eligible to borrow, and then basically approve them and process the loan for application. Some banks have done that. Well, let me back up. The theory there is the quicker the money can get out to these small businesses, the quicker they can pay their employees and keep their employees or bring their employees back from the unemployment ranks. That clearly hasn't happened in a lot of cases. Some banks are moving pretty quickly. I know, and one example of approval happened and funding happened on the exact same day. I will say probably the majority of what's happening is it's a 10-day process from approval to funding. So those that were early in a week ago Friday should start to see funding early this week. Others, I'll give you an example. I'll name out Chase. I think they deserve to be called out on this. Chase, we heard from one of our clients that Chase has an 80% rejection rate, at least as of, this was sometime in the middle of last week. And they were rejecting applications because the addresses that companies were putting in on the application, the zip codes didn't include the additional 4-digit zip code, and so they rejected it and that they had to resubmit. So that is one of the reasons for a rejection. The other thing that Chase has done is their application now is 15 pages long, is asking for a whole host of information, revenues, and other information. So if anyone on this call is a Chase client, I would love to hear kind of your experience and see if this is system-wide or if it was just kind of a one-off with this particular client. The other thing that I have seen, I actually have it up in front of me. One of my clients, let's see, they got approval for a $930,000 loan, and I have the promissory note from this particular bank. And when you get your promissory notes, I really encourage you to really read that in detail. There are some things, at least in this bank's promissory note, that were kind of eye-opening. And I'm just going to read you a couple of highlighted sections. I don't want to bore everyone, but I think these are pretty important. There's a section in here that it's in the very first page. It's actually probably the fourth paragraph down. So they really want to highlight this. It says principal forgiveness. Some or all of the principal of the indebtedness may be forgiven as permitted under Section 1106 of the CARES Act. Borrower, not lender, is responsible for ensuring that borrower is eligible for debt forgiveness. And then it says borrower shall, within 12 weeks after the date of this loan, which was April 7th, request debt forgiveness to the extent borrower is eligible for debt forgiveness, and provide lender with all the documentation the lender requires to support the borrower's request for debt forgiveness. And then it basically says that the lender has 60 days to basically make that determination. But this is what's really interesting is the lender will not be liable to borrower for lender's determination. And it says borrower waives any claim against the lender related to debt forgiveness. So the lender makes the determination if it's forgiven or not, and then
Did we lose you, Matt? I think we did.
Are you there, Pete?
Now we're here. We lost you for a second.
I know. I think my computer refreshed and it went back to mute. So technical issues.
It was actually probably a pretty good pause because I think we were all trying to digest exactly what you just said out loud.
Yeah. So basically it says, in a nutshell, the borrower is going to be responsible for everything that has to do with the debt forgiveness, but the lender is the one that makes the decision on it.
How's that work?
That's why I wanted to read it verbatim, because it blew me away, and that the borrower is going to hold the lender basically harmless in this whole thing.
So what do you think recipients of that should do? Are they pushing back, or do you think this is just something that was thrown together because as we know, time has been crunched down to an infinite level, just trying to get as many things as they possibly can get done? You think this is just an oversight, and they were just using kind of a cut and paste from an old agreement?
No,
but it's an agreement someone's signing, so they should be really pushing back and questioning what does that mean, correct?
My gut feel on this is they're trying to hedge all of their bets, because the government can change their mind at any time about what's forgiven or not. And so instead of trying to say that the government is responsible for what's forgiven or not, they're trying to push it on to the borrower, because they don't have the government involved in this particular contract, right? They are SBA funds, but they don't have the SBA signing off on this contract. So that's my gut feel, and I don't know if we have an attorney on the phone here, but that's my gut feel, because it would be bringing in a third party into this contract who's not a party to this contract.
Well, we do have an attorney on this call. Dennis, where are you? I saw your name for a second. I'll unmute you, Dennis, so I don't do the finger tap with. There you go, Dennis. Are you there?
Yes. I'm here. Can you hear me?
Yes, we can.
Yes.
Yeah, it seems to me, and I haven't read that provision closely, I've just heard it now for the first time, is obviously if I was the bank's attorney, I would be saying, yes, you're borrowing the money and you owe it back unless it's forgiven. And of course, the conditions for being forgiven are being determined by the government. And we know that the Small Business Administration and as the agency is going to be the one that's doing the rulemaking, and as we apply different conditions to the rulemaking, you might think that you qualify, but end up not qualifying, and they're simply saying that you bear that risk. It seems to me that in using the loan, you're going to have to get very good at financial advice to stay away from the lines and to be as clearly as possible within the purpose of the act. Rent payments and payroll, I think, are probably the safest areas. And obviously the areas that you go to that stray from those areas are going to have a little more risk about how somebody at the SBA issues a regulation that could cut you in or cut you out. But it's pretty clear that it's going to be your liability, not the bank's. That's my impression.
And that brings up a good point, Matt, as far as tracking the assets. So we just did an email who said that she was very happy to report that they got their PPO loan approved and it was funded, and they already had their loan that was actually deposited. But are there things that you're recommending for your clients as far as tracking the assets? I've heard things like opening up a separate bank account, especially, putting up separate journals inside your accounting software. What are you talking to your clients about for this?
We're not necessarily recommending or suggesting at this point doing anything unique compared to what they've been doing. I think the big thing, at least again, right now, the guidance is how you spend those funds, right? And so making sure that you maintain that your percentage of payroll, making sure that at least 75% of these funds are spent on payroll, and then also tracking your FTE, because I know that was a factor in as well. They didn't want to see your full-time equivalent employee base go down. So in terms of the asset side, we really haven't done a whole lot other than what we have done is, if you look at depending on the size of the SBA loan and the PPP loan, is it over the $250,000 bank limit that you're going to be basically insured for? And so we're saying make sure if you get a big loan amount put it somewhere else so that you're under those limits or do something safe with it. That's probably the extent that we've done. It's not a bad idea, but I don't know if I would necessarily go to the whole extent of creating, a separate, if you, I'm using quotes, entity, if you will, for tracking these funds, because it should be fairly straightforward to start pulling this information together, 12 weeks after the loan is dispersed as to how you spent it. So.
That was from a bank that actually recommended that, so possibly there was.
There might be something in there. Yeah, yeah, that doesn't surprise me.
So, are there any updates? So I know with EDL, if I remember correctly.
Oh yeah, yep. So EDL, there's a big limitation on. Well, yeah. So that was on my items to hit as well. So the EDL, if you remember, it was going to be up to $2 million available. You can get $10,000 down payment. This kind of came out. This broke like very late Friday Friday the 10th. That the SBA has now self-limited the EDL loans to $15,000, down from the $2 million. Only the government can take a $2 million opportunity and make it $15,000 over a weekend, but that's what they did. And I really started, again, it's just kind of broke, and there's been information just circulating around with Business Journal just hit it as well. They said it's because of the oversubscription of those funds. But I've only talked to a few people that have actually applied for the EDL loans. So it actually kind of surprised me that it wasn't more on the PPP side of it.
Well, I have personal experience with the EDL just because with my wife's company, her business banking relationship is at a credit union, and the credit union was not set up as a SBA lender. And I know they are working towards it. So when we just kind of talked through it and what some of her needs were, the EDL kind of made sense because that at least can, get her back on her feet and get her teachers up and working again, and then also kind of rebuilding their payroll. And I called the SBA just to check in because we submitted it, I think it was a week ago Friday. And when I called the SBA, they were very, very good on the recording of telling me where I was, but I started out at 1,752 and, slowly went down. And an hour and 10 minutes later into the phone call, I did get a representative on the phone. And she said that she does not have any information for us because they don't yet have a system that's in place to be able to track where the status was of our actual loan that we had submitted. So I think they're trying to figure it out as well because of the extreme volume that came in. She said that they just couldn't even, she had no idea if it would be a week, if it would be 2 weeks, or if it would be 2 months from now.
Wow. Yeah. I heard a number thrown around that 3 million applications came in on the EDL fund. That's the number I read recently. So.
Wow. I know our banker was saying that they were getting 200 applications an hour.
Oh, my goodness. Hey, one thing when we're talking about banks, I want to let you know. So there was some drama around Wells Fargo. And so if there's any Wells Fargo clients on the call, it's important to know. You probably already know this, but just let's make sure. So Wells Fargo on Friday, when everything was to be opened up, told most of their clients, at least the clients that I was talking to, hey, we're not up and running yet. Our web application link isn't live yet. We'll email you as soon as it is, and you can go and apply. And that actually was the same process that a lot of banks were using. We'll sign up here, we'll email you, and you have the link, and you can go. By Monday, they sent around an email that basically said, I'm sorry, we've taken all of our funding availability is used up. And that's because of the bad acts that they have done in the past for the whole opening fraudulent bank accounts and that type of thing, that they were limited on the amount of growth that they could have and growth in terms of lending. That within about 2 days, the SBA and actually the Fed got together and uncapped them for these types of loans, or at least raised their cap significantly. So they were then back in business by about middle of last week. So if you thought that you were done with Wells Fargo and couldn't go back to them, it might be worth a try going back to them. I don't know if anyone else has an update on that, but that's the last I heard as about the middle of last week.
Okay, cool.
Yeah.
I guess. I'm glad they're up and running. I didn't mean to be flippant about that comment. Sorry about that. There's a lot going on in the brain. Do you have any ideas or any opinions on any type of a phase 4 that's coming out? I mean, I've heard things about, I think they're calling it the Main Street loans, which is going to be a separate loan for businesses from, I think, 2 employees up to 10,000 employees. Do you have any information on that or any gut feel? Have you read anything?
Well, I mean, I will say that probably the biggest gut feel that I have is this is a political football right now, right? And it was going to be a potential phase 3A to reload the PPP program with the $250 billion, and that quickly got shot down by the opposite side, and they wanted to start throwing a lot of additional stimulus dollars in there and kind of bailout dollars. My gut feel is it's not going to be a 3-something. It's going to be a 4, and it's going to be big. That's just my gut feel, because someone has to start addressing the airlines. You start hearing stuff talking about airline bailout, and they're already talking to them. Will that be part of phase 4? I don't know. Will that be a separate deal off the table of phase 4? There's delay in employee portion of payroll taxes. There's talk about that. I think that could possibly be on the table, and that would help, obviously, the individual significantly. But someone has to come to the table and with a plan to help the big companies. I think the PPP has helped a lot of the little companies, or is trying to, but really nothing's been done to that big company. But I do know that this is a political mess right now, in that the one side of the aisle is going to try and extract a lot of projects out of it. Also, you hear one last thing on there is infrastructure. Building bridges, road improvements, all that infrastructure type spending, which would possibly get America back to work. Those are my thoughts. Pete, I don't know if you have any other thoughts, or anyone else on the call has thoughts on it. Another New Deal, is that what I'm hearing you saying? I know. I hate to say it, but the more I listen to what's happening in Washington, it's sure seeming like that's going to be the case. Okay. Well, I appreciate you giving us those updates. Dennis, I know you're still on. You have your pulse on this stuff. Do you have any comments about what you think maybe a phase 4 might look like? Have you read anything?
I can't say that I have any great insight to what's going to happen in Washington. Obviously, I think the most likely thing is that there's going to be increased funding, and it is a matter of allocation of where it's going to go. So each of these bills has a set amount of funding, and when the fund's out, it's out. And obviously there'll be pressure to increase those caps in some way, but I have no great insight about how the politicals will be resolving this. So. Okay, thank you. Well, we will definitely continue researching and reading, and on our weekly calls, obviously, if there's any changes or any movement on a phase 4, then we'll make sure that that'll be a big topic of discussion for us. Well, thanks, you guys. I appreciate that recap. And again, if anybody has any questions, you may certainly shoot me an email over at info@arcwood.com, info@arcwood, because we'll have a quick Q&A at the end. What I'd like to do is just kind of spend just a couple minutes just because talking with my team, there's been so much information where it's almost been just drinking from a fire hose when you're trying to digest FFCRA, the CARES Act, and that was the most information to be talking about. But we did want to kind of circle back and spend a little bit more time than just a fleeting few minutes on some of the benefit changes are. I know we've talked a little bit about kind of the HSA qualified plans and how they've been opened up to cover telehealth. So because there was a concern a little while ago that HSAs could possibly be disqualified if the insurance plans went to a zero copay for the virtual visits or even for the telehealth benefits. But the IRS made adjustments to that.
We did talk about over-the-counter medications where we no longer have to get the doctor's prescription for the FSAs, the HRAs, and the HSAs. And then, again, the addition of the menstrual care products. Actually, I think that's been cycling back and forth for almost a decade, but that is now a part of, there's no sunset provision on that, whereas we have the sunset provision on the HSA qualified plans. And then just to remind everybody is that we do have a mini COBRA here in Arizona. So if there is a situation where people are being terminated, then they will go through a COBRA application process. State of Arizona, it's medical only. It's not including the dental and the vision, but it goes up for the 2 of the 19. And then we've got the federal, which kicks in at 20 people plus. And that does include, your medical, dental, vision. That's been around forever, so I think everybody understands that. But really some of the things that it's important to make sure that is changing in the insurance companies is that, well, first is that they're waiving all copays and deductibles for any type of diagnosis costs for the virus. And that happened just because that was considered an essential health benefit under the Families First Act. So that means it would put it into the preventive care services, which, as we all know, has 0 copays. What we do have coming on some of the insurance lines is that now they're also waiving copays and deductibles for the treatment of the virus. And so these are the carriers that I've seen come across. This list is most likely going to be changing. It does include pretty much just fully insured clients, except for Cigna. Cigna does a lot of business in the self-insured market for 25 plus. And so they positioned it where it was going to be a negative election, which means that their clients were going to have this benefit unless the plan sponsor opt out of waiving copays and deductibles for the treatment. And there are some slight differences between the insurance companies, and we have a big master list. So any of our clients, you can certainly reach out to myself. You can reach out to Linda, to Jessica, and we can certainly kind of give you the finite details if there's open questions for there. We have seen that there is waiver for telemedicine. Certainly in a quarantine type of environment, in a stay-at-home type of environment, there's a lot of encouragement to make sure that folks are not going to the doctors for, for, I guess, inappropriate type of reasons. There's an encouragement for the telemedicine, and there's 2 different types of it. So the telemedicine that's going to be the one that's going to be built into the insurance plans themselves. Health Equity, I believe, HSA Bank, Optum, because they're owned by United Healthcare. They typically also have some type of telemedicine that's built into their service. But for the built-in systems, they're waiving copays. But now also Governor Ducey here in Arizona, through his executive order 2015, he states that the virtual visits for telehealth can be billed the same as the face-to-face visits. So our participants in our plans do have the opportunity to do the visual and the chatting with their primary care physicians, and that is going to continue through the state of emergency. So once Ducey lifts the state of emergency, then that would sunset. And then just as a side note for all of us that have pets is that the veterinary group, they got their own executive order, and they are also permitted to do the virtual visits and Skyping or Zoom or whatever the systems that they happen to be using for taking care of pets. I'm not exactly sure how that would work, but just so you guys know that we have protection for our pets as well. Additionally, Governor Ducey issued 2020, which is expanding pharmacy benefits. And so it's just reducing and relaxing some of the rules on obtaining prescriptions. It's increasing the fill rate. So on some maintenance medications, if there was a limitation of, say, 90 days, now you can actually get up to 180 days. So work with your pharmacies, have your participants work with the pharmacies. That was issued and signed on the 11th. It's still active, but that also is reviewed every 2 weeks. So that will sunset at some point. And then probably the last one, which is probably one of the more important benefits, is all the carriers And this includes the ancillary coverages, so the long-term disability insurance, life insurance companies, in addition to the medical companies, they all have some type of a COVID response webpage. And I've looked at, probably not all of them, but a number of them, and they are very rich in the information that's being provided. And especially on behavioral health and EAP programs. This is a new world for us right now. There's probably going to be some permanent changes that are going to stay once we are back online. But the reentry, and this is something that Dennis and I talk about is how do we reenter after being sheltered for 30 days, 45 days, 60 days, et cetera, how does, what's that process? And because of isolation and because of how, our lives are so different from being quarantined, or at least having to stay at home, is that can be impacting mental health. So I know on whoever's in our benefit systems that we use with ease, we have links out there for the employee assistance programs, but all the carriers are waiving copays, they're increasing access. If there was a limitation on who is available to use the EAP based upon a specific benefit line, because traditionally they are associated with a long-term disability or short-term disability benefits, those have all been expanded. And so I think just from that type of a perspective is we want to make sure that our participants know that, there's places to turn to, there's places to, talk to counselors telephonically, virtually. And so if you're recognizing anything, just communicating with your folks, please know that those benefits are available. And then kind of switching gears a little bit, this is kind of a question that I get from just talking with clients and just individuals. It's just like, we know that this is going to cost. The treatment of COVID and the virus it's a high dollar behind it. And you can see some of the service per utilizers in the second section down here, that if we have somebody that hits the ICU, it's a $38,000 tab from an employer-sponsored PPO perspective. Medicare is reimbursing about $17,000. But even if it's a non-ICU inpatient stay, the bills are clicking in, on the average of $12,000. And there's with a baseline infection rate of about 20% of the insureds to these groups, you're looking at some serious dollars. We're talking billions and billions of dollars. And so that's a lot of the times people are asking me, so what is this going to do to our insurance premiums next year? What do we have to look forward to? Is this going to just, we already have strain and pressure on our budgets. What's 2021 going to look like for us? And I think the summary of this is we really don't know. However, these are the studies that we're looking at, is that when the insurance companies are filing their premiums, they're doing it by the third quarter of this year. So they're looking at 2019 data to come up with 2021 information. But now when they're looking at the 2021 plan year, there's going to be some factors that are going to be coming into play. Is where are they going to be, or where is our society going to be as far as controlling the pandemic? Is it something that's still going to be going strong in 2021? If it is, then they're certainly going to price in for that. But if we have a better handle on it and we're back to work, rebuilding our organizations, then that probably is not going to be a big factor, because one of the biggest things and the takeaways from this is that the losses from the 2020 plan year are not going to be built into the 2021 plan premiums. So they have to kind of encapsulate what they expect those premiums are going to be for that next calendar year. But some of the other variables that we're looking at is, as you know, especially the folks on the phone that are in the medical field that are deemed non-essentials, that our elective surgeries have gone down to virtually zero. And so even though we have this higher increase in the demand for the COVID treatments, we're also seeing a reduction in the demand for elective surgeries. And so is that going to offset the cost? We don't know. Another continued conversation is what's going to happen with the economic downturn. Because if we have less people that are insured through employer-sponsored plans, what's going to happen to that pool that we're working with that's going to be used to create the premium structure for the actual benefit plan year for 2021? And then kind of going back to what Matt was saying about the federal assistance in phase 4, we don't know if there's going to be something in there for the insurance companies. They're probably will be something, but there's so much new information that they're trying to digest that they don't really know. I mean, California, through their calculations, is predicting that they're going to have an increase between 4 and 40%. That's a huge variable. And so kind of understanding that is, I think 2021 is probably going to be a little bit high, because I think the insurance companies are going to be pricing in a little bit of the unknown, because usually if you have an unknown, that usually lends towards conservativeness. But then go back to remember in the fully insured stuff, we have got medical loss ratios. And so if they build in too much, then some of those dollars are going to get refunded back. But understanding that's not going to help our conversation as far as talking about cash flow and just strategies for next year. But the summary of it is they're looking at it, they're analyzing it. They think there is going to be a significant offset between the reduced elective surgeries. However, those are going to push into 2021, and so they may, depending upon how that math works out, and the number that I'm kind of being told is probably somewhere between 4 and 5%, so on the low end of what California was saying. So I don't know if that's helpful or not, but it is a question that comes up a lot when I'm having conversations, so I just wanted to make sure that I shared that. And that kind of wraps us up for today. I know that we're at about 45 minutes, and questions have, actually, I don't think I have any pending questions right now. Is there anything that, Dennis, you'd like to add, or Diana, or Matt, is there anything that you'd like to have as closing comments?
Well, this is Dennis, and I'll say that we'll do our best to keep up with any legal changes. It's, my questions have now become, gee, how do we fit into the structure that we were talking about a few weeks ago? And I think that's where we all are today. Comment about the future is that we now have lots of discussions about where we will be in the future. And it's not going to be a return to normal. It's going to be return to a new normal. So we all need to be trying to think about our industry and seeing where we'll be as we move into our next world. And it's going to be a new world that we're going to deal with for a couple of years. So put your heads and minds to that, and that's really where the next questions are coming from. And I think Peter's little exposition on what's going to happen to health premiums is that type of question.
Yeah, there's a few unknowns right now, but as you mentioned, is that we're going to do our best to stay on top of it, and then to at least give enough information out to our attendees so that you can have some thoughtful conversations about it. And I know, Dennis, one of the comments you and I have always had is just trying to step back from kind of a crisis response and have more of a thoughtful response and more of a thoughtful dialogue with leadership teams, just to make sure that we have an understanding of, okay, what's version 2.0 from this, what's version 3.0 from this, and trying to kind of outline, some possibilities for the future. And I know that there's a lot of unknowns with all of this, but it's just, taking a step back and just having more of a thoughtful dialogue with, what are we learning from this? What's, the best way to kind of restructure so that we're all viable and can continue on doing what we do. So thank you, Dennis. Matt, do you have any closing comments for anybody? I'll let you unmute yourself, because I was playing the whole mute-unmute with you for entirely too long today.
I think I'm unmuted. I'll get this technology down. But yeah, I just appreciate any comments that any of our listeners, experiences that they had with their banks, with the SBA. You got my email sitting there. Shoot me a quick email. That's how I'm staying informed of basically just getting real-time, on-the-ground information. So, I may have lost you again. Are you there? Oh,
yeah, I'm here.
You're here.
Oh, good. All right. All right, we're good. We can hear.
I was just muting myself so it didn't sound like I was breathing heavy in the background.
Awesome. So anyway, so I just appreciate any information that you guys can share with your experience with the PPP program, and I will do the same thing that Dennis said. We'll just kind of commit that we'll stay informed, and as we hear new information comes out, I think this one is we're going to have new information pretty much throughout the next several weeks on this, fine-tuning the program. So stay tuned.
Thank you, sir. And Diana, one question I probably want to circle back with you is when I was talking about the EAP and behavioral health, are you experiencing a higher uptick in those types of, conversations or with employees or leadership teams?
Not yet, but it's definitely something that we need to think about and making sure that we are staying in communication with our employees on a regular and consistent basis. We're used to being able to walk down the hall and chat with anybody at any time when we're in our offices or in our buildings, but this is a whole new way of learning to communicate. So we need to make sure that we're doing so to help ease the stress and the concern and the worry of our employees, especially for those that may have been furloughed or temporarily laid off. But they want to still know that they will have a job when all of this is done and when the order has been lifted. So, I've seen groups and I've got companies that are doing, virtual happy hours or virtual weekly meetings and those types of things. So just making sure that we are staying in contact with everybody.
And we've learned it forces everybody to take a shower and shave every once in a while, because if you're going to put the screen on, then you're going to dress up a little bit.
Exactly.
All right. Well, thanks everyone for participating. And then for anybody that's participating on the phone, if you'd like to continue sending questions to info@arcwood.com, then we will certainly follow up. But I appreciate your time today, and hopefully have a safe week. And we'll talk to you guys next Monday at 1 o'clock, and we'll send this video distribution out shortly, and as well as with the survey. So I appreciate your time. Have a safe week, and we'll talk soon.